Good day, everyone. This is Rob Peters, founder of the Standard Trust Group. And today's presentation is Relationship Capital, Accounting for Your Success, co-sponsored by ProfitSense and L. Harris Partners. I'm a current senior advisor for L. Harris Partners. As mentioned, I'm the founder of the Standard Trust Group, and my focus is to free the energies of professional services and consulting firms to earn higher levels of relationship capital that drives performance. The agenda. I'll share about the problem and the vision. The trends creating the relationship capital economy. Is there a good way to measure relationships online? Can we measure them in accounting terms? I'll define what a relationship capital interaction is and how relationship capital can help industry. Today, a lot of research has been done from various universities that there's between 20 to 40% performance being determined by the quality of people's relationships. And in today's hyper-connected world, there are a number of metrics coming out. Obviously, Clout score is probably the most popular, peer index, CRED, the Net Promoter Score, which allows companies to measure their brand advocates out there and how are they positive or network trending. In a B2B world, which I'm part of, this is really the current standard of trustworthiness. This is my profile, and people look at my LinkedIn profile and they see the people that recommend me, people that endorse me, what I talk about, which is fine. But I believe the vision, we need to start going deeper. Companies have been very slow to adopt social media. Companies are trying to get stuff done. And in order for people to work in teams, I believe commitments need to be captured, measured, scored, kept commitments, and perceptions. I'll talk about the details of this, as well as other influential, measurements. There'll be a dashboard of measurements measuring your relationship capital and how you're performing, which I think is going to be a major indicator of an individual product or service or business's success going forward. My epiphany came back in 2003. I conducted a 5-year study of chief information officers, and 98% of them said they did not do a good job or effective job of communicating the value proposition of IT to the board. They did not do a great job building relationships. This is what the CIO said about themselves. For me, I was on a MBA Association alumni board panel with fellow executives, and I was asked, what's your number one value, Rob? And I wasn't clear about my values back in 2003. And it really changed my life when I got clear about my values, because as I talk about relationship capital in this presentation, values, guiding principles, these are important to guide you in order to consistently earn relationship capital with others. What are the trends creating the relationship capital economy? Well, for many of the people listening on this webinar today, we are not just about financial transactions. Yes, we need financial transactions in a capitalistic world, but we've gone beyond transactions. Transactions are a result of great quality of relationships in a peer-to-peer hyper-connected world. We're in a collaborative consumption economy. The fastest growing parts of the global economy are this common area where people are sharing their knowledge, sharing their cars, sharing products for free. And because of technology, we're near zero marginal costs, which is having a transformative effect on the economy, by which I believe many people will be working as independent contractors. I think by the end of this decade, 40% of people will be independents. And obviously the mass adoption of online social networking and the freedom of people sharing their knowledge, sharing content. We're at the early stages of a transformative effect on business and our ability to measure performance and integrating relationships with results. Now, Dan Pink talked about this in his famous TED Talk, but mechanical skill versus cognitive skill is an important understanding, and the candle problem basically takes away the left brain financial incentive, capitalistic rewards-driven economy. Carl Dunker of Leipzig University created this problem where he give you a candle, a box of thumbtacks, and it matches. Dr. Sam Glucksberg of Princeton in 1962 created two teams. One team, he would just say, I'm going to measure you by how quickly you can solve this time. Normative time, they would volunteer to do it just to come up with some average times. Another team, he financially incentivized. The top performer would get $20, top 20% would get $5. So people were financially incentivized to solve this candle problem quicker. Their goal was to put this candle on the wall. Now, what happens when you're financially incentivized? That was a remarkable finding of this data, and this data gets replicated over and over again. So nothing has changed since the early 20th century and since Dr. Sam Glucksberg financially incentivized this in 1962. The people who are financially incentivized, the people driven by carrots, actually were 3.5 minutes slower than the people just doing this out of intrinsic motivation. So it was easier to do extrinsic carrots and sticks, rewards and penalties if you're in an industrial age, but in a knowledge age, it actually causes the brain to kind of go into fight or flight mode where the financial incentivization you rationalize things. It takes you longer to problem solve, which is the opposite of what business is trying to do in a major sense. So I think it's having a profound effect. We're kind of realizing the fact that this effect is happening today in this slow growth economy. Now, is there a good way to measure relationships? I believe so. I've been passionate about this topic for a long time. And what could we measure? As I mentioned, guiding principles is a term we use, and these are the ones that we've standardized on: respect, trustworthiness, understanding of boundaries, support, accountability, responsibility, and honesty. If you believe in these values, and you can't fake it, if you believe in these, this guides your ability to capture and earn and grow your relationship capital. If you don't believe in these values, then you might struggle in your interactions to grow your relationship capital account. So the answer, I believe, is open standards. Standard of Trust Group is not an open standards body. It's a for-profit business. But I was part of a team that created this open standard called Relationship Capital, because quality relationship measurements should not be owned by Google, Facebook, Twitter, LinkedIn. This should be neutral ground. And I know the accountants and financial thought leaders listening to this webinar understand this. So we're actively seeking open standards bodies. So if you know any university or potential third party that would be interested in carrying the flag for adopting open standards and getting businesses to apply this, this is my passion. I would love to talk to you. So can we quantify these intangibles? Today 70% of business assets are intangible. We definitely need, and in a relationship economy where the currency is our ability, our trust, our trustworthiness, and to get things done, to accomplish, to grow, we need to quantify these intangibles, because if we don't, we're destined to revisit another mortgage meltdown. Examples of Bernie Madoff. The least trusted industry in the world right now is probably banking. And the least trusted government is probably our federal government here in the States. This recent case with Donald Sterling, the owner of the LA Clippers, who's been banned for life. This type of behavior that isn't positive, that isn't agreed to in this interconnected peer-to-peer world is being rejected. And so you have to be very cognizant of what you do, how you do it, because it will be measured. It's not perfect, but as I go through this presentation, I'll give you the high level of how this is being accounted for. Now, how can relationship capital help industry? Well, today, many CEOs tell me my company can't harness the networking explosion. Well, having a relationship capital standard makes it mainstream. It cuts across all walled digital gardens, allows businesses, professionals, and entrepreneurs to have fun keeping score of their networking successes. It's time savings. Networking is very time consuming beyond the normal day-to-day responsibility of your jobs and responsibilities. And there's too many systems, and there's no standard that cuts across these systems. So it kind of provides that common, inclusive language and process for taking an interaction, capturing that data, and accounting for it. B2B, it's hard to do business with my social networking relationships. That's what I hear from many business executives. Well, if you can make relationship capital process and measurement and values an integral part of commerce, as part of the natural interaction of networking, well, RC puts products and businesses into this networking mix. It enables this universal B2B coupling with the ability to build relationship capital and let individuals easily conduct online commerce with their contacts. And it's excellence. There is no current standard for measuring networking success. And RC provides that reward. It rewards the best behavior in people. As I talk about the interaction process, measuring made and kept commitments and perceptions, people are doing this in their heads. So putting that out there into a standard and capturing that with a measurement makes a lot of sense to a lot of executives. But we need that common language, this common open standard to measure this quality and put some quantitative measurement tied to it. Now, here's the details at a high level. If you want to know more, please reach out to me. I'm happy to talk about this. But at a high level, relationship capital is a standardized process by which made and kept commitments and perceptions are accounted for. Think of every individual gets a relationship capital account, much like a debit and credit account. So, checking account. So if you make a commitment, negotiate a commitment, then make a commitment, you keep it, you fulfill it, you earn relationship capital. The person receiving the commitment is the one that credits your account. Now, if you don't keep the commitment that you promised, your account will be debited. Plus, you'll get qualitative feedback. And think about that. Think about the ability to portability of sharing that with your tribe, with your network, with your employer, with your spouse. I think people get excited about likes and retweets and comments on social media, but I think in business, getting things done, it might replace performance appraisals. It'll probably have an important ability to make project teams much more effective. Another way, as I mentioned, to earn relationship capital is capturing positive perceptions. So when you've completed a project or a task, or you fulfilled a commitment or suite of commitments, you can send a poll, much like a survey, to the person or entity that you made the commitments to and fulfilled the commitments, asking them a number of questions by which, from 1 to 10, 1 being the worst, 10 being the highest, how did I do on my quality, my presentation, my financial analysis, and the person can give you a response. Now, 0 is not a negative. 0 means they cannot give you a response because of some regulatory compliance reason. So in conclusion, I believe relationship capital is going to have a fundamental transformational aspect. I do not own relationship capital. I'm really evangelizing it. I believe we need an open standards, and I believe if the accounting and CPA advisory industry would take this on, we could make a profound difference in the success of this peer-to-peer world and measuring our progress towards higher performance and higher level cultures. I've written a book called Standard of Trust Leadership. Would love to get your take on it. It's available on Amazon as an ebook. Again, if you have any questions, please reach out to me. This is a topic that's it's hard to do in a short webinar, but happy to go into detail if you're interested. Till next time, guys.